Good morning, everybody. Happy Monday to each and every one of you as we get into the game plan this morning on this Monday morning. Big things going on. Stock market is down again. Remember, the neckline of the Head and Shoulders broke on Friday. That tells us we are likely going lower, and that is the result today. Bitcoin breaking through 92,000. Can it regain that key technical level by the end of the day, or are we now breaking lower from that megaphone bearish pattern? We're going to look at all this plus the big movers of the day, but let's get right into the action here this morning. All right, so S&P 500, what are we looking at here? Well, we closed over here on Friday, right over in this range. You can see today we are lower. Yes, we're off of the lows from pre-market. I'm going to tell you why we're off of the lows. The 10-year yield, which was up initially, has come back in a little bit, and that has lifted the markets a little bit off of their lows. And that's the main issue, right? So for all of us out there that are like, wow, what's going on? Why is the market selling off? Is it geopolitical? Is it Trump? Is it this? It's nothing like that. What it is the 10-year yield has been pushing higher. We're now at just under 4.8%, and that's basically creating a scenario where people have an alternative, right? So when yields back during COVID were at 2% or 1%, people were, oh, wait a minute, the stock market is trading at this PE. We're getting no money by having our money on the sidelines, so let's put all of our money in the stock market. Now you get almost a guaranteed 5% by going in the 10-year bond. And again, that makes a lot of people say, wait, at the current valuation of the stock market, all the way up here, do I want to take that risk and risk seeing my money drop 20% on a correction, or potentially do I put it in the bond market? There's other issues here at work as well, and we'll flip over to the daily chart now and take a look. But before we get into that, let's talk a little bit about some other factors. There's now this rumbling, and this is so normal to the market because investors are so panicky, but we're down like 5% off of our all-time highs. The kicker is now the markets are getting nervous that the Fed is going to be behind a weakening economy by not cutting rates. And I can't do it without smiling. I mean, it's just like, here we are down 5% from all-time highs, and the markets are getting worried that the Fed's behind the curve of cutting rates now. So forget inflation. Remember, inflation was going up. We saw the PPI last month, CPI numbers, PCE numbers. It's now getting reversed to markets getting skittish about, oh my goodness, if the economy weakens, the Fed isn't looking to cut rates. They won't be ahead of the curve in case the economy comes down. So it's just one or the other. But the point being is, in December, we had a cycle date for you guys. December 15th. And this is the kicker. I said to you guys, and Drew came up with this cycle date. He's amazing at his work. But the kicker is this, is that cycle dates are a change in psychology. And you go from a change in psychology where on December 15th, by the way, right here, right? That was your December 15th high, essentially. It was within like a day or two of the all-time high. But most people are like, oh, this is all hooey, these cycles, the lunar cycle, the solar cycle. The key is this, and this is what I want you guys to understand today, is that individually, do I feel any different around this date? No, I don't. So it's probably all hooey, right? No, this is the kicker. It's subconscious, and it's a little, like imagine 1 grain of salt changing, like you have a bowl of soup and you drop 1 grain of salt. Will you taste a difference in that? No. But when you map the amount of salt over 1 million or 100 million investors, aka bowls of soups, now you have a significant shift. And that's the kicker on the cycles, folks. And that's why, again, most people throw them out and say it's all a bunch of nonsense because they don't feel any different. But it can be so minor, but when you map it over 100 million investors in the world or whatever there is, it is significant. And it's all it takes when you have valuation at the levels we have, when the charts are telling us these things, all of these things combined. All right, so let's go into a couple other things. On the S&P 500 here, we had the head and shoulders pattern. Again, we talked about this last week. We broke on Friday, right? Here's your neckline. I do my best to draw a flat line across. You broke below. What this signals is that you should see continuing down moves in the near term. The target, again, remember the target, you take the highest point of the head, drop that plumb line down, you take that distance, and I'm going to just, assuming it's approximately that, it takes us to about 560. So right in this range, right here, 560, and I'm going off the SPY, right? So the S&P tracking ETF here. But this would basically be 5,600 on the S&P, maybe 5,650, somewhere in that vicinity. But that's, again, the target of completion of the head and shoulders. That gives us a basis. Now, I will say this, is I do think there are certain stocks that are getting close to bounce levels. They're not there yet, but this is, as a trader, I'm always always looking for opportunities, right? So I was just going over this in my crypto video this morning, how we have just a few days ago, crypto was rallying up, and it was like, okay, let's short it right up here. If it gets here, we're going to short these cryptos. And then when all of a sudden today we're seeing these cryptos fall, and we'll go over crypto in a little bit. Now all of a sudden I'm like, okay, guys, start analyzing your buy levels. So that's the kicker, is that as a trader, you always are looking for those shorter term big technical levels to be able to trade. All right, so we have our head and shoulder pattern, folks. Just keep in mind, that doesn't mean, in my humble opinion, that we're going to hit 560, 561 right here, and then all of a sudden go like that. Right? My guess is you have something like a retrace to the neckline right here, and then your next leg down. But again, the point being is that there's opportunity for big bounces. One of the stocks I'm eyeing, I'm actually still short with members in smart money stocks and ETFs, Palantir, right? So we're in the money on Palantir as of this morning. It's moving lower, down to, down a couple dollars last I checked, but it's actually getting close to some key supports. In fact, we can go right to that chart now and take a look at this action, right? Because again, the kicker is always know your technical levels and your trading opportunities. All right, so if we look at this, and I'm going to go to the big board to kind of isolate it down with you guys, but what we see on Palantir here is that it was at the high end of a parallel right here, and you notice how it goes right through these lows. So you have a definitive parallel. By the way, the kicker of a parallel, you can't be like, oh, here's a parallel. You have to look for that bottom line that aligns with the lows that also makes sense with the highs. So again, you can't have a parallel what's like that, right? That's not a parallel. That's more of a wedge pattern. In this case, it's very obvious this has teeth. Why does it have teeth? Because it aligns with 1, 2, 3 lows, and then you do the high here, and it aligns here. And so that gave us our signal right there that we should fall. Falls beautifully, beautiful. So now, as a trader, I start to say, okay, well, I'm neither bullish nor bearish long-term on Palantir. All I am is a shorter-term investor who's looking to capitalize on shorter-term moves. Now, the beauty of Palantir and some of these stocks in volatile periods is that a short-term move can be like 10 or 15%. So while a long-term investor generally is going to make money by holding long, I can do, I can go short, make 15%, then I go long, make 10%, then go short, make another 15%, and then go long, make 20%. The point being is an investor here is basically flat on their trade chopping while there's opportunity via swing trading. And again, just looking at this very clearly, we have a support here. I have anywhere between 60 and 56. There's going to be massive support coming into play. Upsloping parallel. You're doing a Fibonacci retrace as well right in this vicinity. That's very interesting. So essentially, we're looking at a chart on, I think it was trading around 64 last I checked. If we get down into that 60-ish area, I'm going to start nibbling if we get into those high 50s and looking for a good bounce. And a bounce on Palantir, if this goes down here, is it possible that it goes all the way? Maybe. But for me, I would just look for a retrace, right? So you have your high here, drop there, and then you just look for your retrace. But if you're buying in, let's say, at 58 and you get back to 68, I'm guessing that's maybe a 50% fib retrace. Boom. That's a big percentage move for a couple days or a week or two. And that, again, is the beauty of swing trading. Now, listen, most people can't do this very successfully because you have to know the technicals. You have to be able to find the levels, which is what I help you guys do. And again, I'm going to continue to do that here at verifiedinvesting.com. All right, let's go over a couple charts here. The dollar is very important here on the day. The dollar is pushing up today again. This is another issue for the markets. The markets do not like a strong dollar. It makes us in the U.S. less competitive in terms of gains or in terms of products. And then it also hurts the multinationals, which really, in all fairness, every company out there is multinational. If we look at this, there's a very firm resistance where the dollar should top out, and that's around 110. Now, I'm gonna jump around a little here, but you guys are going to see where I'm going with this. I love gold over the next 6 months or so because if the dollar has been rallying like this, usually when the dollar goes up like this, gold falls. Well, if you look at the low on the dollar down here in September, and we go back to gold, and we flip over to the gold chart, you can see that basically that was the high, right? In October, we saw September the dollar bottom, but then in October, gold topped, and gold's been struggling here. Now, gold is down a little bit today, but my thesis here is that if the dollar begins to pull back substantially off of this level, that actually will be a tailwind for gold. So listen, who knows where gold goes in the next week or two? Those shorter term moves are always harder to predict, but ultimately, again, if you're looking 6 months, 12 months out, I think gold by end of year is at that key level of 20. $3,000 an ounce. So again, I think by the end of this year, we'll see 3,000. Now that makes me bullish on Newmont Mining, on GDX, a lot of those plays out there. Again, you always want to slowly dollar cost average in because they're very volatile, but ultimately I do think all those do very, very well in the remainder of the year. All right, we looked at the 10-year last Friday, so I'm not going to go into that, but that's obviously a major concern. We got to talk about Moderna here. Look at Moderna getting smoked to the downside. They came out and warned this morning. Now, just about a week and a half ago, I talked about Moderna as having a good technical pattern. I bought it with members of Smart Money Stocks. We closed it out for over 15% gain right here, right above $48. Thank goodness we did that because, again, it just shows you can't get too greedy in terms of taking profits. Grab the money and run. It was an amazing move up. We saw all that chatter about bird flu and vaccines and, grants from the U.S. government, and then boom, it's falling today. Now, look at the parallel. Look at this bigger parallel. Notice all the lows matching up, all the highs matching up here. I'm going to quickly go over to the big board. We'll take a look at where I'm looking at this as a tradable level, even maybe a swing trade level. So generally, when we look at these big movers, it's more of day trading prep for the Apex Live day trading room on Verified Investing. But in all fairness, a lot of these levels can be used as swing trading. You guys know parallels. What would be the logical opportunity here? It might be hard for you guys to see, but this parallel down here is probably the logical, using logic, where we would want to pick this up. Where is that? It's right around $32 a share to about 31 or so. So I think once this gets in that range, maybe it even touches 30, we'll have to see. But on a swing trading basis, right down here is a very interesting opportunity. It is still, I think last I checked, it was trading at, 35 or so, give or take. So it's still got a little ways to go. I think it got as low as 34. But again, right when it gets to 32, 31 to 30, that's where it starts to, at least on a technical basis, using this parallel here, low. Look at all these lows right across here, right here, and then the highs matching up beautifully. That would be this zone right down here, right around that 32-ish to $30 level. All right, let's continue on with movers and shakers this morning. Rigetti Computing, holy cow, guys. Again, I hope some of you guys heeded my warning about a week ago saying it was ludicrous trading up here. The stock pre-market is down again, trading around $7.60, now 65% off of its all-time highs from just last week. Wow. Two levels to watch here. One is at around 680 to 675. That's going to be technical support today. And then 590 to 595 right here. These two levels are going to be very solid support. I would trade them in the live day trading room. I'd even consider a swing trade. It's finally getting to a level where if it gets down to this area, you've now gotten down to basically what we would consider probably about a 618 Fibonacci retrace or even a 786 from these lows over here, from really before the big rally started. And so right in this range here actually gets my attention. And again, keep in mind, I'm not passing judgment on that, hey, Rigetti's going to be a major player in supercomputing. I have no clue. Right? I'm not going to pretend I have a clue. All I know is technicals. And technicals tell me that you should, if we hit here, we should get some sort of bounce. Now, if you get down to, let's say, $6 or $7 on this thing, a bounce back to 10 is almost a 50% move, about a 40% move. That's all I care about, right? I don't care if it goes back to the highs here. I don't care if it even goes back to gap fill up there. All I'm looking to do is play the short-term momentum and the bounce off of it and grab some money. But again, could this be a 30% bounce? Yeah, 30, 40% bounce very easily, maybe even more. But I caution people about getting too greedy. Just like Moderna, we just went over that. Thank goodness, looking back, that I said, you know what, 15% in about a 3 or 4 day trading period for us in smart money stocks and ETFs was good enough. Let's pocket it, put it in our move, and let's just step back and look for another opportunity. Thank goodness we did that, or we'd be down about 15% on the trade at this point in time. All right. So let's continue on here. Couple others to look at, some of the bigger names. I'm keeping an eye on Nvidia today. Nvidia, wow, it's getting hit even harder here in the pre-market, making new lows. That is not good for Nvidia. One of the lines we're watching is a close below 132 today, this upsloping trend line. If that gets taken out, your next support is going to be around 127. All right, now for a day trader, this is really on my radar. For a swing trade, no way. I'm not buying right as it breaks support, major long-term support. But as a day trader right here, heck yeah, I'll be eyeing that. What's interesting here is you can actually extend the line out and look right to this high right here as well. Ultimately, do I think it's going lower? Yeah, I do. I do. I think their margins are past. I mean, at this point, margins will continue to shrink. Even as they continue to get more and more revenue, their margins are going down, and the stock is priced on amazing margins that won't last in this industry. Even as good as AI is going to be, and it's going to continue to be a bigger part of our lives, eventually I think it goes back here to $97, $96 per share. A&F's moving this morning. It's down, not a huge amount, but Abercrombie, a lot of the retail sales are coming out here. So from a lot of these stocks we saw this morning, like American Eagle, I think, came out with their sales from December for the holiday season. A&F, Lululemon actually had surprisingly good sales. A&F actually had better sales than expected, but I think the stock was priced a little too pricey, and it is down a little bit in the pre-market. If we look at this on a technical basis of A&F, I want to show you this line. The line you're watching on A&F is right here. Look at this. So if this were to close below, let's say, 139 today, be very, very careful. This thing could be in a major breakdown. Likely your target would be about 109 if that level gets breached, all right? And you can see, in a weird way, it was almost like forming a bearish wedge, right? You have your high pivot up here. Here's your flagpole, right? There's your classic flagpole. It's kind of a little bit of a, not a steep flagpole, but still flagpole. And there's your flag, bearish inside bar chop. And now it's seeing some downside, so likely headed lower. And then Lulu's coming in a little bit off those highs. I think the market, again, dragging it in. Plus, Lulu's had a big rally off of the lows. If it does dump out today, 344 gap fill would be a key day tradable level. I have no swing trading levels on this whatsoever. All right, we got to get into Bitcoin here, guys, because Bitcoin is breaking the level, and I've guided you to every step on this in terms of the exact high of 108 to where this is now likely headed. All right, so listen, we don't know. So first and foremost, what don't we know? Today it's intraday. By the end of the day, maybe they get us back above that level. Maybe. We don't know. If they do, awesome. Then it holds that 92, 91, 8,000 level of support. If they close us below, I go on confirmation watch. Confirmation watch means to confirm the breakdown, right? So we know how many games the institutions play. They whip us around. They so many times will break us below. They get the shorts to pile on. They stop out the longs, and then they rally it right back above. I don't like that, so I look for confirmation. Confirmation is not foolproof. It doesn't mean that, oh my goodness, there's a 100% chance it's a breakdown, but what it does do is it raises the probability significantly to about 80% that it is a real breakdown versus a fake out from the institutions. That's important, for me at least, because how many times have I gotten whipped out in my career, and even to this day, every once in a while, they still whip me out. It's just the nature of the beast, but I want to limit that. If it does confirm here, I think we're going down here. Now, there'll be stopping points. I mean, you have a little support here around around 87,000 right there. But ultimately, this 74-ish area is that former all-time high going back to March. That would be your logical downside target. There's also a fib just around that 70,000 range as well. Now, if it does regain this level right here, well, it could easily trade back up here, this upsloping trend line that has worked beautifully. But remember what I was telling you guys is that unless we broke above this line here, there was nothing to write home about on crypto. And in fact, it was forming what we call in the technical analysis industry a megaphone pattern, right? So I'm just drawing my horrible drawing of a megaphone here. But essentially, that's a bearish, here's your flag, bearish megaphone. Megaphone just means the two lines are diverging versus converging, which would be a wedge pattern. So they're diverging, so it's a megaphone pattern. But any sort of inside bar action is just generally bearish, and we're seeing that result right here. And again, I've guided you guys to that ultimate, discovery there. All right, we looked at gold already. Let's look quickly at silver. If we look at silver today, it is getting hit, which is to be expected, right? So now not only are we concerned about high rates, but that now the emerging thesis from a lot of bigger, or just the narrative essentially is that, oh my goodness, now the economy is going to go into recession and the Fed's going to be behind the curve. Maybe, maybe not, who knows, but it's that cycle narrative shift, right? It's the mindset shift that changes things. Either way, downside, I've been steadfast on saying I still think silver gets down to around 27. I still am in that camp that it eventually goes there. Oil, so this is an update for you guys on oil. Oh, love to see that. Awesome. All right, so let's talk through this trade. So last week, I gave you guys my guidelines about how I was going to trade this. This is a smart money, commodities, and miners trade. All right, so being on oil. So here we had this move up, and I said, all right, when we broke above here, here's your confirming candle right here. So this was your confirming candle. Here's your consolidation, bullish consolidation. It told me it was heading up. I said, all right, if it gets here, I'm going to short it. That would be short number one of a position, right? So I'm building a short position in oil. It did, it pulled back, and then it popped, and then I said, all right, guys, here's your second line right up here. I'm going to add to that short there. So DCA, slowly build for that bigger move that I think is coming in. This morning, pre-market, I added to my SCO, which is a 2x ETF short USO or oil. And so far, that was right up here, near the highs. I didn't get the exact highs, but close to the highs, and we're already seeing a rejection of that level. Now, does it guarantee that I'm going to be right? No, there's no guarantees in trading. I could be wrong, could be a horrible trade. We don't know. What I do know is I'm following the technicals of the chart. So if I follow the technicals with multi-factors, I can get my win rate to 70 to 80%, right? And that's really my goal, is to get as close 80, maybe a little bit above if I'm really, really focused in above that level. But the point being is that I started a short here, and then I added right up here, dollar cost average right in the middle. Still out of the money a little bit, but I like this trade to the downside. I do think, again, there's now chatter about these new sanctions on Russia. It doesn't really matter. The U.S. produces so much oil, and if the economy is going to slow in the U.S., and we already know China's a mess, oil should go down. Okay? All right. Lastly, guys, quickly on natural gas here. If we look at natural gas, it did pop last night in the overnight when it opened, and it's already given up those gains and gone negative. We're still trading in essentially a parallel here, resistance up at this side and support down here. All right, guys. Wow, so much to cover. Amazing. I love the action. By the way, PPI data tomorrow, producer price index, inflation data, CPI on Wednesday. That's arguably more important. Thursday is retail sales. So again, lots of stuff going on here this week economically. And then also remember, we have JP Morgan, Citigroup earnings. We have a lot of earnings coming out, mostly from the banks this week. So it's going to be packed. I'm going to have action for you guys, tradable levels all week long. I'll be back with trading the close later today. But as always, thanks for joining me on this Monday morning. Now I'm going to go over and day trade the heck out of this market with members. You guys have a good one. Take care.